Hello, everyone. Welcome to the market opening bell for Thursday, July 10th, your 10-minute guide to the stock market. Markets are focused on U.S. tariff policies and the widening decline in China's June PPI, with Hong Kong stocks falling on Wednesday. The Hang Seng Index opened 86 points lower, with losses expanding to a low of 23,827, down 320 points at one point, closing down 255 points or 1.1% at 23,892. The Asia index fell 111 points or 1.3% to 8,597, and the Hang Seng Tech Index dropped 93 points or 1.8% to 5,231. Total market turnover was 233.8 billion Hong Kong dollars. Southbound funds recorded a net inflow of 9.256 billion Hong Kong dollars into Hong Kong stocks. Notable net buys included China Construction Bank totaling 1.1 billion, Alibaba 1.014 billion, Meituan 833 million, Xiaomi 421 million, Legend Star 389 million, China Biopharmaceuticals 308 million, SMIC 240 million, and Guotai Junan International 238 million. Statistics show southbound funds have net bought SMIC for 14 consecutive days, totaling $9.4 billion. China Construction Bank for 5 days, totaling 2.343 billion. Guotai Junan International for 4 days, totaling 828 million. Meituan for 3 days, totaling 2.681 billion, and Alibaba for 3 days, totaling 2.709 billion. Technically, the Hang Seng Index fell to a hold above 24,000 and fell below the 20-day moving average again, remaining in a consolidation pattern. Watch the 50-day moving average, which has risen to near 23,600, as a break below could signal further weakness. A-shares rose initially, but later retreated. The Shanghai Composite hit a high of 3,512, but failed to hold 3,500, closing down 4 points or 0.13% at 3,493. The Shenzhen Component Index fell 6 points or 0.06% to 10,582. Combined turnover for Shanghai and Shenzhen was 1.5051 trillion yuan, up 51.2 billion yuan from the previous day. The renminbi central parity rate against the US dollar was set at 7.1541, down 7 pips. China's National Bureau of Statistics reported that June CPI rose 0.1% year-on-year, turning positive after 4 months of declines, mainly due to a recovery in industrial consumer goods prices. CPI fell 0.1% month-on-month, with the decline narrowing by 0.1 percentage points from May. June PPI fell 3.6% year-on-year, a wider decline than May's 3.3% and exceeding market expectations of 3.2%. It fell 0.4% month-on-month, matching May's decline. Producer purchase prices dropped 4.3% year-on-year and 0.7% month-on-month. The month-on-month PPI decline was driven by seasonal price drops in some raw materials manufacturing, lower energy prices due to increased green energy, and price pressures in export-heavy industries. US President Trump plans to impose a 50% tariff on copper imports, with US Commerce Secretary Nutnik indicating the policy may take effect in late July or August 1st. New York copper futures surged 17% on Tuesday, the largest intraday gain since at least 1988, though the gain narrowed to 13% by close. Jiangxi Copper opened 3.5% higher at 16.16 Hong Kong dollars, but reversed, closing down 3.5%. The US 50% tariff on all copper imports will significantly increase the cost of Chinese copper entering the US market, reducing competitiveness compared to US domestic producers or suppliers from countries like Chile, Canada, Mexico, or Peru, which may secure exemptions or lower tariffs. China is the world's largest producer and consumer of refined copper, with 223 output of about 12 million tons, accounting for roughly 45% of global production. Exports are an important revenue source, but domestic consumption dominates. U.S. copper imports primarily come from Chile, 44% in 2023, Canada 18%, Mexico 13%, and Peru 7%, with China's share relatively low, estimated at 5 to 10%. In 2023, China's copper and copper product exports totaled about $100 billion, with exports to the US estimated at $5 to $10 billion, or 5 to 10%. This suggests Chinese copper companies have low reliance on the US market, with domestic demand about 70 to 80% of total demand, and other Asian markets, example Japan, South Korea, Southeast Asia, being more significant. On Wednesday, US President Trump announced that he has sent letters to at least 7 additional countries, including the Philippines, Brunei, Moldova, Algeria, Iraq, Libya, and Sri Lanka, requesting new tariffs on their imported products, with tariff rates ranging from 20% to 40% for each country. Despite renewed tariff threats, US stocks rose. The Dow Jones Industrial Average surged over 300 points at one point, closing at 44,458, up 217 points. The S&P 500 gained 0.6%, closing at 6,263, and the Nasdaq rose 0.9% to 20,611. The Nasdaq Golden Dragon China Index, which tracks Chinese ADRs, fell 83 points or 1.1% to 7,401 at close. Nvidia rose 2.8% in early trading on Wednesday, hitting an intraday all-time high of $164.42, with its market capitalization surpassing $4 trillion for the first time, though it closed up 1.8%. Reports indicate Nvidia plans to launch a new AI-based chip designed for the Chinese market as early as September to expand its influence in China. The chip will reportedly use Nvidia's RTX Pro 6000 processor, but exclude most advanced technologies to comply with US chip export restrictions. Other chip stocks also performed well, with Broadcom up 2.2% and Microsoft gaining 1.4% after broker upgraded its rating. Amazon began its Prime Day promotional event on Tuesday, running through Friday. According to Adobe Analytics, US online sales during the first 24 hours of Amazon's Prime Day rose 9.9% year-on-year to $7.9 billion, marking the largest single-day e-commerce sales total so far this year, surpassing the $6.1 billion in online sales during last year's Thanksgiving period. Minutes from the Federal Open Market Committee (FOMC) meeting on June 17 to 18 reviewed divisions among Fed officials regarding interest rate outlooks, primarily due to differing expectations about tariffs and inflation. Some participants believe tariffs would only cause a one-time price increase with no impact on long-term inflation expectations. However, most committee members warned that tariffs could have a more persistent impact on inflation. According to the post-meeting dot plot, 10 officials expect at least 2 rate cuts by year-end, while 7 predict no rate cut this year. Our stock pick today is Yum China, stock code 9987. Yum China delivered robust performance in the first quarter of this year despite a market environment filled with uncertainties, demonstrating its business resilience and the effectiveness of its geo-driven strategy focused on efficiency and innovation. KFC's coffee brand K-Yum Coffee reached a milestone of 1,000 stores, leveraging a breakthrough business model that utilizes KFC store space, resources, and membership system to attract more customer traffic. For Pizza Hut, building on the success of converting older stores to the WOW format, the group opened new WOW stores in lower-tier cities, with capital expenditures low as half that of standard Pizza Hut stores. In the first quarter, total revenue grew 1% year-on-year to $3 billion with system sales increasing by 2%, primarily driven by a 4% contribution from net new store openings. The group added a net total of 247 new stores, including 62 franchise stores, accounting for 25% of the additions. As of March 31st, 2025, the total store count reached 16,642, with KFC operating 11,943 stores and Pizza Hut 3,769 stores. Delivery sales grew 13%, maintaining double-digit annual growth for the past 11 years, contributing approximately 42% of KFC and Pizza Hut restaurant revenue. Digital order revenue reached $2.6 billion, accounting for about 93% of the group's restaurant revenue. First quarter same-store transaction volume rose 6% year-on-year, marking 9 consecutive quarters of growth. Same-store sales reached 100% of the previous year's level for the first time since Q1 2024. Operating profit was $399 million, up 7%, with core operating profit increasing 8%. The operating profit margin improved to 13.4%, up 80 basis points, driven by high restaurant margins and reduced administrative expenses. The restaurant margin was 18.6%, up 100 basis points, mainly due to low costs for food, packaging, property, rent, and other operating expenses. Diluted earnings per share rose 8% to $0.77, a new first quarter high. The group returned $260 million to shareholders in Q1, including $172 million in share repurchases and $19 million in cash dividends. Yum China is actively exploring innovative technologies such as robotics and generative AI to enhance operational efficiency. Amid the current dynamic market environment, the group remains steadfast in pursuing its full year 2025 targets, including a net addition of 1,600 to 1,800 stores, while continuing to create long-term sustainable value for shareholders. Recommended buy price 366 Hong Kong dollars, target price $398, stop loss 350. I do not hold the aforementioned stock.